Hello, everybody. Mark Hill, author of The Secret to Prosperity. Today, we're going to talk about stock market downturns, aka bear markets, and how to thrive and how to survive during these so called bear markets. Right now, it's the last week of 2018, and we've been in a stock market downturn for the last 3 months since October, and experts are predicting this may last all the way until June, another 6 months. So a total of downward pressure on stocks for about 9 months. Now, no matter when you're listening to this video, 5, 10, 15 years from now, this is always relevant because there will always be a stock market downturn or correction at some point. I've been through two of them already during my adult years. They can be a little bit scary at first, but a good investor, a seasoned, intelligent investor, sees them as buying opportunities, and they're less likely to panic like the masses. That's the key. That's the number one thing you want to remember. Don't panic during a stock market downturn. The stock market is always going up over the long term. Just remember that. On average, the stock market has always gone up about 10% a year on average. Well, it is averaged a 10% gain over the long term. So it might be some down years, but there's going to be more up years than down years. There may be some down months, but there's going to be way more upward months than down months. Investors who can control their emotions the best will make the most money. Don't get too excited when stocks go high, and don't get too frantic and depressed when stocks go down. Have a long-term 5, 10, 20-year investment horizon. Have a perspective that is long-term. Now, when you invest in a stock, you're buying a piece of corporate America. You're buying a piece of a great company. If you buying an individual stock, hopefully you've done your due diligence, and this is why I usually when I buy individual stocks, usually I only invest in dividend paying stocks. So even when the stock goes down, I'm still getting dividend income. The dividend income, if it's a good company, is always going to keep going higher no matter what. So if the stock goes down, then I buy more. Dollar cost averaging, bring down my cost basis, buy more when the stock goes down, and that will increase my dividend payment, because the more shares I have, the bigger the dividend will be. The bigger the cash flow. And dividends account for about 40% of all stock market gains anyway. So it's very important to focus on the dividends and not just stock appreciation. And recessions or bear markets are usually short-lived. They usually only last about 6 to 18 months. They're predicting this downturn will be about 9 months. So it's no big 9 months, 10 months. It's no big deal if you have a 5 to 10 year outlook. You don't want to panic when prices get volatile and fluctuate. It's like if you owned an apartment building that was generating cash flow every month. You wouldn't panic if the value of the apartment building went up and down every month or every day. You're not trying to sell it in the short term. Long as that rent keeps coming in and you can raise the rent every year, you've got your cash flow. That's the most important thing about an asset is the cash flow. So if you got a great dividend paying stock, long as those dividends are still coming in, it's no big deal. That's one of the major reasons you have the dividend paying stock, so you can have that cash flow. And if the stock price goes down, like I said earlier, you can buy more shares, and then your dividend cash flow increases. So it's actually a great buying opportunity when stocks go down. It's almost like a Christmas sale. It's all psychological. Like during Christmas, if a popular car like a Porsche or a new Range Rover, if they say we're having 50% off on Porsches and Range Rovers, or on Louis Vuitton or Rolexes, everything's 50-60% off, the masses would bust down the doors to purchase these items that don't produce cash flow and that are going to depreciate as soon as they make that purchase. People will flock to get those items that don't accumulate wealth. They will flock to get that. But the masses won't flock to get stocks that are selling at depressed prices, that will produce income and it will appreciate over the long term. So you have to think like a wealthy person, not like the masses. The rich will prefer. See, the rich actually love when stocks go down because they know how to take advantage. They see the value. When the housing market crashed, the rich people had a field day going out buying real estate at pennies on a dollar. So the same thing with stocks. When stocks go down, you can get them 50-60% on discount levels, and you can have a field day. In the long run, the most money is made during stock market downturns. That's when the most money is made. Investors who can control their emotions and think long term will make the most money. During all the other past bear markets and recessions, the market has always bounced back to higher levels. That's why some of the best investors, they don't really worry too much about timing the market or trying to get in at the right exact point, because they know over the long term, if they just keep dollar cost averaging, putting a little money in when the market is low, putting a little in when it's high, on average, they're going to have that ownership of the market, of that stock or the index fund at a low price, and they're going to get richer and richer over the long term. Do your research and look at the stock market and some of the big blue chip stocks in 2008 and 1999, and 10 years later, 20 years later, you would have been very, very happy that you had the fortitude to invest when everyone else was scared. You would have been handsomely rewarded. From those levels of 2008, 10 years later right now, stocks are up 500%. Some stocks up 1,000%. So when others are fearful, this is when you'll find the best opportunities to invest. So I know over the next 6 to 9 months, I'm going to have a field day of finding great blue chip companies, titans of industry type of stocks at low discounted prices. It's going to be a great opportunity to build wealth over the next 6 months during this so-called bear market that they're predicting. So this is Mark Hill. Let me know what you think in the comments below. Like, share, and subscribe. Until next time.